Welcome to the Investing Podcast, presented by Tusk Media. Now, for your early morning look at financial news and activity in audio and video form, here's the Morning Market Mimosa.
Yo, what's up, everybody? Happy morning. Haven't even showered yet, no coffee, doesn't matter. Had to bring you the Morning Market Mimosa. This is the Investing Podcast presented by Tusk Media. Check us out on Twitter at Tusk Media LLC. Make sure you hit subscribe no matter how you're listening or watching. Whether you're on iTunes, we got both audio and video podcasts going on right there, or YouTube. Hit subscribe. We really appreciate you being here. If you're in iTunes, leave us a 5-star review. It really helps people find our podcast, and it has a disproportionate weighting in iTunes podcast rankings. I said this earlier last week, but it's really true. We're getting more downloads than ever on the podcast, but our ranking is slipping because we're not getting as many 5-star reviews. So need you guys to get out, leave 5-star reviews. We talked about this on Monday. We want you to leave topical 5-star reviews. Get on there, leave a 5-star review, and roast our interns. So you got Joseph, you got Austin, and you got Scotty. Roast those guys. We'll read your best roasts on the air. Let's jump in. Market. Futures are pointing slightly positive so far. Dow futures are up 26 basis points, S&P up 17, NASDAQ up 78, some real strong growth there. Gold futures down about 13 basis points, oil down 37 basis points, trading in the $42 range. So rough run for oil. Earnings is driving the day. We've talked about that for the last couple weeks. Couple of companies to draw your attention to. Twitter. Not bad numbers financially speaking, and this is one of the big frustrations with Twitter is financially they tend to put out decent numbers quarter after quarter. They're growing at the top line. They tend to be growing on the bottom line. But the number that everyone analyzes with Twitter are the numbers like monthly active users and subscriber growth. So basically the number of people using Twitter are more people using it last month than the month before, and those numbers weren't good. So Street is not liking that. The stock is down about 10% after reporting those numbers. You know, you kind of wish they would just keep their mouth shut on that stuff, but I guess they're not allowed to do that because if you're a company that's reliant on users, you have to talk about users. Facebook, another social media company, will report after hours today, so definitely a stock to keep an eye on, especially after we waged a war with Facebook and Facebook Live during the second quarter of 2016. So we'll see if that has an impact on the stock. Apple. Pretty surprising numbers there. Apple beat a lot of estimates on a number of fronts. Apple is up more than 7%, up around 103, 104 bucks. So strong day for there. The big takeaway from there, and maybe a story you've seen, was Tim Cook talking about Pokemon Go and pronouncing it Pokemon. So never sounded more like a father there, Tim. Kind of looks like a typical dad, doesn't really look like he would know what was going on in the world of Pokemon. But nonetheless, there we are. That gives us a great segue to talk about our Pokefolio. If you go back a couple weeks ago, we did a podcast about investing in Pokemon Go and augmented reality. We've actually done 2 podcasts that hit on this, but Joseph, the intern, and I sat down and we talked about what stocks would benefit from this new game. And so we went through there and we built a 5-stock portfolio and basically decided to see how it would do relative to the market. So we want to update you on that stuff. So for context, over this time period, so since the launch of Pokemon Go through the close of business yesterday, the S&P 500 has had a really nice run. It is up 4.07%. Now this is just an index return. This doesn't include any kind of dividend or reinvestment, anything like that. So the stocks that we looked at, AT&T and Verizon, we looked at both of those primarily because we felt like people were going to use a lot more data now. If you're using a lot of data this month, it's probably not shown up yet in your bill. You're about to get rocked, so it's not necessarily surprising that these aren't taking off, that these companies aren't taking off right off the bat. But AT&T is down about 1.4%. Verizon is down close to 2.5%. And obviously there's other stories going on with Verizon, things like the Yahoo acquisition that we've talked about earlier this week. Magna International, large supplier of car body parts. So think fenders, bumpers, things like that. We feel like a lot of people are going to be playing Pokemon Go on the road. Don't do it, kids. Don't drive and poke. It's an old saying. But we think that maybe some people are going to get in more fender benders than normal, so that this company is going to stand to benefit from that. Stock is up 16%. 0.06%. Applied Micro Devices, making kind of the processors, particularly in the realm of augmented reality, that stock is up 42.16%. A really nice run. And then Zag, a company that we like a lot for this space because they're making those Mophie cases, the cases that you can charge and basically add to your battery power on your cell phone and protect your phone at the same time. That stock is up 28.83%. So solid run for these Pokey stocks in the Pokefolio. If you want to look at the sum of all of this, we are looking at a really, really nice total gain because, again, we equally invested in all of these ideas. The portfolio is up 16.6%. So, full disclosure, our clients own some of this, our clients own some of this, our clients don't own any of this, but it is something that we wanted to do kind of for fun and track it. It's part of a series that we call Next Level Investing. If you have an idea of a trend, something really trendy and in the moment that we should do a Next Level Investing podcast on, let us know. You can tweet at us at Tusk Media LLC. You can leave a 5-star review comment saying, hey guys, for your next episode of Next Level Investing, why don't you do this? And we will definitely consider it. I'm not going to make promises, but right now there's a great chance that we would actually take your suggestion, dig in, and build a model portfolio out of it. So you guys have a great day. We're going to be back in just a little while with the Stock Market Power Lunch. We're going to be back at the end of the day with the Investing Happy Hour. And then we've got some special content coming up to you guys tomorrow, but we'll keep you updated on that as we go. Y'all have a great morning. Talk to you soon.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.